Trading is closed on February 14th, 2022. This is our disclaimer. It's my trading plan for tomorrow, February 15th. Remember, I can be wrong. Any trade you make should be at your own risk. Well, here's what we said. We said that if we maintained Friday's close at Monday's open, we should get higher prices. And we thought that the low Friday was a candidate for the low of the leg, and if it held, especially if we gap up, should have a good rally, and we had some higher price targets. Well, we gapped down 6 points, so we didn't really hold Friday's close at the open, and we didn't hold Friday's low, so that idea died. And it's just a question of semantics, whether you say it was canceled or failed, whatever it was, we didn't get these higher prices. We did call for the pattern with the early high, which we got, and tomorrow's pattern should have the early low. Now, typically when you have this pattern with the early high, you get a close near the high, and if you don't, it's weak. If you don't, you get a straight line drop, which is this, and it leads to more weakness. As far as how weak it has to be, you don't really have to undercut this low. You don't even have to close lower. It just means more weakness should be coming tomorrow. It doesn't say how much. During the day, we got an ultimate buy signal. The rally was called false. The drop was called false. Eventually, the ultimate buy signal paid off. The afternoon, we got a sell signal. The minimum target printed immediately, but no requirement to stop at the minimum. We also have an ultimate sell signal, and that usually delivers more than the minimum, and it certainly did. Here's a look at the daily chart. These lines are DeMark's TDST lines. There's support at and one bar under the line. You'll see the last time we were there, how the support held. We're now right at the support level at today's low. Nothing obligates support to hold, but you're at support. We still have this volume spike, and usually when you get these volume spikes, you should have a rebound rally of some kind. It doesn't have to be a strong rally, and nothing says you can't get a higher spike tomorrow and keep on dropping. But when you see these things, you have to be on the alert for at least a pullback of some kind. Notice that despite this big drop, we closed over all these lows, so it was a big drop without accomplishing anything at the close. Now this drop, the 61.8% retrace of the last wave up. I still think we're in wave Black C. We could have seen the end of A of C, because 61.8% retrace is again the support level. Nothing means the support has to hold, but at least you're at support. I'm not totally happy with any of the counts I came up with, but I think you can count it as a 5-wave structure. And wave 1 and wave 5 equal each other, which is a common occurrence in the pattern. So if we have completed 5 waves down, you really want to see 3 waves up and then another big drop like this. Now again, it's not the only valid count. I'm not saying it's the right count, but you're at support. We couldn't close under these lows. There's a count that works. It wouldn't surprise me if we had a rebound of some kind as long as this low held, but I'm not looking for too much on the upside here, because once this rebounds over, I'm expecting another big drop of the magnitude of this one, and that's a pretty big drop. These are the calls for this week's patterns. Tomorrow's pattern has the early low. We could still gap up. Today's normally bullish pattern was weak instead. It should lead to a lower price printing, but it doesn't obligate us to close lower, nor does it obligate today's low to be undercut. We still have the E-mini volume spike, tends to occur near lows in terms of time. The pullback so far is a 61.8% retrace of the recent advance. And we had a weak day, but closed over intraday lows, and that's actually somewhat positive. The wave count's compatible with this leg of the decline being over. But if we do get a bear market rally, we shouldn't have to wait too long for another steep drop to begin. I'm, at this point, not enthusiastic about playing for a bear market rally here, even though I won't deny it could have legs with these higher targets, and I could change my mind about that. I think the real money is going to be made when this rally, if there is a rally, when it ends, when we get another big, steep, fast drop. That's why I think the real money is going to be made. Tomorrow has the early low. Looking for a lower price, but there's a good chance the low holds when we close up. Not a lot. And that's today's call.